Well, let's put the spotlight on the one thing that has been sparkling bright this year, and especially in the last couple of weeks. And of course, I am talking about the yellow metal, which is gold. We're looking at spot prices trading above $2,600 at this point in time. So what is the trajectory going forward, and what do these rate cuts from the Federal Reserve, if they start kicking in this week, as planned, and what do they mean for the precious metals space? Well, we have with us an expert to answer that. Peter Maguire of XM Australia is joining in. Peter, great to have you on the show this morning. Thanks for being with us. That's really the question. So gold moving higher as we're expecting these rate cuts to kick in. What are the market dynamics that you see immediately ahead?
Surabhi, I mean, you can't deny what's happened over the last, 11 to 12 months. We were at a low of 1,800 odd early October, and here we are mid-September through 26. So the momentum has just been extraordinary, and I feel as though that is going to increase possibly in the run-up to, New Year, quite simply because rate cuts, what's happening geopolitically, and naturally the overall momentum of central bank buying has been very strong, and I feel as though the US dollar will come under more pressure to the downside. So it's going to be, I think, one-way traffic for the yellow metal as it roars into 2025.
So that's, I guess that's a little bit of the trading momentum that kicks in as money gets cheaper when the rate cuts come in. What about actual, demand and supply in the market and the way it's playing out, demand from India as we get into the festive season? Does that look supportive?
Well, I think so. I feel as though that will only increase, and I think the appetite globally across retail investors has been very strong, not only for the paper market, of course, but for physical. So there's the first side. I feel as though that India will continue its upward lift. And, your central bank has been very, very strong as far as buying, along with Turkey and the likes of Russia, and many of the, major nations, and China are buying at record levels. So I feel as though that will continue. And as we, I think, ingest or digest the situation, it's pretty hard not to be long gold and long physical gold. So that seems to be the trade, and it hasn't denied anyone this year because it's just been extraordinary over the last 11 and a half months.
Hi, Peter. Good morning. Good to see you, Ben. So gold, you're sounding fairly optimistic. What about silver? We know that one could buck the trend and sometimes outpace what gold does. What's the view at, on silver at around this $30-31 odd?
Well, Nigel, good to see you. And I think a couple of things. First off, the gold to silver ratio, I think, is very, very lean at the moment. I feel as though that will compress. So if it does compress and you come back, you're now running at about 83 to 1. That's 83 ounces of silver equals 1 ounce of gold, approximate. I feel as though that'll narrow and it'll really start to compress over the next matter of months. And there's been underinvestment in the silver market for the best part of a decade or two. So that seems to be a real big push. And once it starts to gain momentum, I think it's going to be onward and upward. I wouldn't be surprised to take $35 out or higher by end of year. Let's just see where it all rolls, because we've got a lot of big themes about to be played out across the economic landscape, unwinding as far as policy from many central banks, and of course what's happening with US elections and the overall momentum.
Okay, absolutely. Just to get the levels and the targets again, Peter. So gold, what's the next stop that you forecast?
Well, Surabhi, it's pretty hard. I mean, it's just been bouncing so heavily and so dramatic. So everyone was 26 to 2,700, spanked through 26. So 27, 27.50. I wouldn't be surprised if it hit 27 by end of month. That's just as momentum. I'm talking in the futures market. Then the next part, I think silver, it's got to be a $32 to $34 play. And if it really goes through that with momentum, then, $35, $36 it's capable of. Many analysts are out there saying 3,000 or 3,000 plus. And, I remember having these conversations this time last year and people saying 2,500, it won't happen. Well, here we are. And you've got 3.5 months to run to the end of the year. And it just seems to be, very, giddy up. It's galloping away.
Peter, just one question on this, because there's so much debate about what the cut will be, right? As you said, 25 or 50. Even earlier last week, the general thinking was if it's going to be 50, perhaps it'll cause a little bit of worry because markets may assume that the Fed knows more than the market. So maybe 25 is preferable. I'm not so sure anymore. And I don't know if you agree, because there were two articles in the Wall Street Journal and the FT. And if they indeed were, yeah, exactly. And if they indeed were not plants, but basically leaks to condition the market towards a 50, now actually, if you don't get a 50, is that going to be a negative? What's your sense?
Couple of things, Prashant. First off, I feel, and it's really just started to squeeze and compress in the last couple of days. You're running at around about a 15 or 17% chance on Thursday. Then it really changed the whole footprint on Friday. And it's now at around about 52 on the CME. It's 52% probability of a 25 basis point, 48% for 50 basis points. I'm erring the other side on 50. I'll tell you why. They'll front load this because they need to get around about 115 basis points of cuts. And that's why I think that they'll hit it hard. They probably, as you said, there's probably structural weakness in the US economy from the labour market perspective, and they're keeping a very close eye on it. So this is a real concern. So let's just see how this rolls out. But I feel 50, and they'll probably hit 115 basis points, and that's what they're calling by December 31. So there's a lot of movement for yields and certainly for Fed policy over the next couple of months to be, hit us between the eyes.
And then therefore, those calls of 3,000 on gold, perhaps that's how they kind of, add up and maybe even make some sense if you're looking at these really massive rate cuts coming in. Markets get a little spooked, perhaps about, the extent of the underlying economic sluggishness. Thank you very much, Peter. Great conversation with you. You have a good rest of the day and a good week as well.